Your bank pays you almost nothing. The national average savings rate is under 0.5%. But there's an on-chain vault that returned 13.02% over the past year. Let me show you the real numbers and the honest catch. This is the live chart. Net value climbed from 1.0 to 1.13. That's the 13%, and it's real, not a projection. It's called the Apex Insurance Vault, and the name matters. This isn't a random yield farm. Every serious exchange keeps an insurance fund, a backstop that covers the rare times a liquidation can't fully close. Apex funds this vault at the protocol level, and it earns from the exchange's own activity, not from gambling on token prices. Right now, it holds about $12.35 million from 522 investors, and it's booked nearly $1 million in profit. You don't chase a price. You buy a share of the vault, and the share's net value grows as the vault earns. And notice the shape. A steady climb, not a wild spike. That's the whole point of this kind of product. Now, you'll hear this called a risk-free return. Let's be honest about that word. The only truly risk-free return is a government treasury bill. Anything on-chain still carries some risk. There's smart contract risk, protocol risk, and stablecoin risk. Low in a fund like this, but never literally zero. And the rate isn't fixed. The past year delivered 13%, but the recent run rate has cooled to around 3 to 5%. Past performance is not a promise. So the honest headline is this: 13% realized over the last 12 months, with real but low risk. That's still remarkable. Here's why. Here's 13% next to the safe stuff everyone actually uses. Treasury bills, the risk-free benchmark, pay about 3.8%. The best high-yield savings and money market accounts, around 4%. Lending stablecoins on Aave, roughly 5%, and that rate floats every block. Staking Ethereum, only about 3% now, with its own lockups and slashing risk. And the vault's past year? 13. 2 to 3 times the safe alternatives. The trade is simple, and you should say it out loud. You're taking a little more risk for a lot more yield. Whether that trade is worth it is your call. But 2 more things make this vault stand out. First, it's non-custodial. Your funds stay in your own wallet. You hold the keys, not a company. Remember the last cycle? Celsius, BlockFi. People lost everything because a company held their coins and blew up. Apex is a self-custody exchange settled on-chain. There's no middleman holding your money. That's the difference between a bank that owns your deposit and a vault where the deposit is still yours. For a yield product, that control is a big deal. Second, there's no lockup. You can redeem your shares whenever you want. To be precise, it settles at the daily netting. So, it's not an instant withdrawal, but there's no fixed term trapping your money. You request a redemption, and at the next settlement, your share value comes back to your wallet. In, earn, and out on your terms. No 30-day or 90-day jail like some products. If you want to try it, connect your wallet to Apex Omni, open the Vaults tab, and pick the Insurance Vault. Choose how much USDT to subscribe, sign the terms, and you're earning. Start small, that's just sensible. Links in the description. This is education, not financial advice. Crypto carries risk. Past performance isn't a guarantee, so do your own research. Thanks for watching.